So Blackstone is indeed the largest real estate private equity firm in the world. Largest in the US, largest in the world. As of today, they probably manage over $1 trillion in assets, mostly in real estate. So of course they're the top player. They know what they're doing, right? So the portfolio looks pretty good. So I look at the quarterly report they gave it to me, right? So the Japanese portfolio, they have data centers just sold recently for 74% gain. It's at over $600 million. Today, I'm sharing the story with you. But today, we're going to talk about a real story that happened to me. The story that I invested in Blackstone in about 2017. That what happened afterwards. That was in 2017. It was the summertime, and then I was in real estate development and an investment journey. And I have done real estate investment development for several years, but I'm not really sophisticated. I always want to get into commercial real estate, and I was primarily doing residential real estate. I did a few commercial, but not big commercial real estate. So I always want to do something big, something like flashy, something I think is pretty cool, right? Like something mainstream. So this is when I discovered Blackstone. Through my investment advisors, my financial advisors, RA at Wells Fargo advisors. So he told me that that's Blackstone fund, right? The Blackstone Asia fund is really good. The Asia real estate fund is really good, and it's a great opportunity. We should invest. So I look into it, right? The deck looks beautiful. They're going to raise $8 billion, and they're going to invest about 100 properties in all course Asia countries, including Japan, China, Indonesia, India, all these growing countries. It looks really good. They're promising about 15% returns, right? Of course, it's estimated, right? Estimated 15% annual returns. It looks pretty good, right? All those like not as high as I did in my private deals, but hey, it's Blackstone, right? Don't want to invest in Blackstone. So I was like, sure, I'll commit $1 million. Funny story, that guy later on found out he's doing fraud, and he was fired from Blackstone. His license was suspended by FINRA after about 2 years. So looking back right now, I was way too excited about Blackstone. That was a big mistake. Immediately after I invested, I realized the game was completely different than the way I thought it was. First of all, I committed $1 million, but they didn't take $1 million from me. So it means that I made a promise. I signed a legal investment contract to tell Blackstone, look, I'm going to give you $1 million, but not now. It's in the next 10 years. So whenever you need money, I have to give it to you within 5 days, okay? But if you don't need money, I have to hold the money in my account, and I can't do anything with it. The money has to be in the account. So my money is frozen, is stuck in accounts. I can't do anything with it. I have to keep it liquid, wait for the capital call from Blackstone. And they started to do the capital calls, right? In 2017, they didn't do anything. 2018, they called, I remember the first call was like $5,000. I'm like, what? $5,000? And then the next call was like $15,000. Then the next call was like $20,000. And then 2019, they did some calls. 2020, no calls. 2021, $100,000. And throughout the years, right, up until 2024, they only called about $800,000 out of the $1 million I committed. Can you imagine this? They have $1 million committed, but they cannot invest in anything else but sit in the bank accounts stale, waiting for their capital call. Can you imagine this? A fund generated less than $2,000 income, but had expenses over $1 million. It's like opening a small business, selling $200 a year in total, right? But your rents, your labor costs, all the costs together, all the operating costs together is over 100 grand. Plus, you made some bad investments, you lost another 300 grand. So after 8 years, here's the result. Blackstone's main fund netted 4.1% IRR. Sounds decent, right? Of course not. I make more money buying treasury bonds. Like treasury bonds pay me 4.5%. I make more money in stock market. S&P 500 pay me 10% average. I mean, last year was like over 20%, right? My private real estate deal pay me 25%, 30%. Here's the caveat. They make 4.1% IRR. I make 1.55% after all the expenses. Yeah, this is the return I get from the excess fund. This is worse than a saving account. I can put my money in a saving account, make more than 1.55. I spent 8 years, took all the risk, have my money all locked up for them to keep drawing my money. I couldn't do anything. I have this huge opportunity lost and end up with this return that's worse than treasury bond. And I still don't have money back. I don't know if we're going to lose the principal after they close the fund after 3 years. I don't know what's going to happen. But the 15% returns, I don't really expect it anymore. I just want to get my money back. What does this investment teach me? It's not that Blackstone is a bad investment. They're the largest private equity fund in the world. Of course, they know what they're doing. They're great. investors, right? There are so many institutional investors like to invest with them. There's a reason for that. They're really good at what they're doing. But the problem is this investment structure is not suitable for retail investors like you and I. It's built for institutional investors, right? Say, for example, if you are managing a huge retirement fund or pension fund, you have all this money available. You invest in stock market, you're buying your bonds, you want to allocate something to real estate, right? So this kind of investment is not designed for us. And we're like their backup capital. Whenever they need us, they call us. They don't need it, they don't call us. And most importantly, I have zero control of this investment. I don't know when they're going to do the capital call. I don't know when they're going to buy a project. I don't know when they're going to sell a project. I don't know when they're going to return the money back to me. So if you're considering those high-end investments, first of all, do you really understand this investment structure? How does the money flow? How does capital call work? How are the fees calculated? How much control do you have? Can you decide when you get in, when you get out? And lastly, after all the fees, is the actual returns meeting financial goals? Not the estimated fees, the actual returns. Now I only invest in projects that I fully understand and I control it. The returns is irrelevant. At least I know what I'm doing. Right? If I'm okay with making less money, but at least I control the deal. I can decide when I get in, when I get out. So if you have a friend who's now considering investing in those sophisticated institutional funds, please share this video with them. It might help them avoid an expensive tuition fee. I'm Johnny Zhang. See you next time.